What is good with y'all boys? KingJayFx back at with another video. Now today, as I can tell by the title, we will be going over trading psychology and discipline. Master your mind, master the markets. The presentation objectives of today. We're going to be understanding how mindset affects trading. We're going to learn how to recognize and manage destructive emotions, build discipline through structure and awareness, and strengthen our confidence with intentional practice. Now let's get straight into it. Why trading psychology matters, right? Just like they say anything in the sports and things that you do, trading is 80% mindset, 20% the method of how you're operating, right? Success equals consistent execution, not perfect predictions. You don't need to be perfect. You don't need to predict the market right every single time. And if you understand trading, you understand you are going to win and you are going to lose. But it's about how much you make when you win and about how much you lose when you're wrong. Now, mindset determines risk, decisions, patience, and clarity. If you don't have a clear mind, if you don't have a calm mind, if you're not patient, you'll find yourself getting caught in the normal traps that most traders fall into: greed, fear, over leveraging. You know what I mean? It's the same old cycle. So that's why if you don't master your psychology, it doesn't even matter if you know how to mark out fair value gaps, find the best optimal A+ setups, if you don't know how to manage your trades while you're live. Right, so fear, it freezes your action and it makes you want to exit early. So maybe you're looking for a buy and it's going to your target, and then you see it start to reverse, but you're not understanding how price is naturally structured. You haven't been in enough trades to trust the trade cooking in front of you, playing out, going up and down while still eventually hitting your target. But in the middle of that, instead of being confident, you tend to be more fearful because you might be over leveraging. You may be, you know what I mean, in a lot of different psychological places mentally. So you just want to be aware of how fear affects you and how you can trade. No different than greed, over leveraging. If you're ever in a trade where you're super anxious, your heart beating heavy, you know what I mean, you don't want to lose, then you're most likely over leveraging. You're most likely in a position side that's way too big for your account. If you ever feel that feeling, even if it's not too big for your account and you're in a pretty decent amount to where you feel like, you know what I mean, you can't be calm, then obviously you're in just a little bit too big. Being able to be aware of that will be a blessing to you in these markets. Now, revenge trading, right? We're all human. We all have to deal with our flesh, our human emotion, and it's being able to defeat our flesh in every single day, right? And revenge trading is one of the things that hold most traders back. I think revenge trading is I would rank that as number one, because you can get over fear and greed and FOMO and stack up 3-4 months of consistent profits. But one day of revenge trading will erase all your progress. It's probably the most destructive psychological pitfall on here that I always like to hammer into my students mentally, that you need to be prepared for. As soon as you start feeling like, I need to get it back, just close the charts. Because it's all about awareness at the end of the day. Once you understand what's taking place, you are no longer able to be controlled by it. So that's why we go over things like this, so you are better equipped for these markets. And like I was saying about FOMO, we'll go over that really quickly. Entering trades late or without a plan. You see it dropping quickly. I don't want to miss that drop, so I'm gonna just get in. Where's the stop loss? No valid place to play stop loss. You're just getting in because you don't want to miss the sell. And you might actually win that trade, but over the course of time, you will not be profitable, because that is not a habit of a consistently profitable trader. The worst thing you can possibly do is take a trade outside of your trading plan and win. The worst thing you can possibly do is hit your daily loss limit and then continue to trade and then make money that same day. So if you said, if I'm getting out at $500, it hits negative 500, should be done for the day, come back tomorrow, right? Instead, you're like, nah, I still think this trade is gonna cook. You get back in and you make 1,500, right? And then you would think that's good, right? But no, that's not good at all. Because the next time you're supposed to be disciplined on your rules, because your rules say to stop trading if you lose this amount. The next time you lose that amount, and you're gonna think about the time where you won the money, and you're gonna repeat that same habit as if that is some type of statistically proven method to make profit consistently. That is not it. And then you end up losing it all. So it's about focusing on the percentages, focusing on the skill, showing up every day and following your rules. Money will come. Don't focus on the money. Now, like I was referring to, recognizing emotional triggers. W meme. Sudden anger or frustration. See, it's all about awareness. If you're aware that you're getting a little frustrated, getting a little angry about how the markets is moving, it's not respecting things that it should be respecting, price is actually a little weird today, be aware enough to be like, nah, I'm good on this today. I'll come back tomorrow. We'll see how the market started that day. Now, the urge to increase size after a loss, which is normal. Most people feel that. It's not normal to do, it's normal to feel, right? So, being aware, like, I just lost this. Let me just up my lot size one contract and make it back just quicker. That's not a part of your trading plan. If that's not a part of your trading plan, then we don't do things like that, because that is not a habit of somebody who's consistently profitable. And like I was saying, the obsession with making it back, that type of thought process, it's about the type of thought process that you have in the live trades that will be able to determine if you're consistently profitable or not. Right? Because I play basketball. I always like to leave the court on a made shot. I don't like to leave the court missing, right? If it's a layup, anything, I'd like to leave on a make. But in this, you cannot leave on a win every single day. Some days you have to accept the loss. So you have to understand the type of mindset of things previously that may be affecting how you are here. You need to not be obsessed with making it back. You need to be obsessed with the process of how to trade and the process of learning the skill to apply it to the market. Everything else will fall into place outside of that. No impulsive entries or exits. If your strategy says get in here, get out at your target, get in there and get out at your target. No different than we have entry criteria, we do have exit criteria. So if your exit criteria was not met, there should be no reason for you to be getting out that trade. There should be no reason for you to be getting in the trade if your entry criteria and your multiple confluences aren't present. If you're not able to identify if this is an A, B, or C setup, there should be no reason why you are even in the trade. Because when you go back to document the trade that you take, like I teach all my students, you will see, did I have this many confluences or did you not? Did you follow your rules today or did you not? And that's what you really need to focus on. Like I was just referring to in the last slide, it's the journaling, right? What isn't tracked isn't measured. One of my favorite quotes, right? So track your mood before the trade, emotional intensity during the trade, and then your reaction after. Identify pattern tied to mistakes. This is what helped me grow. How do you know if you're still making the same mistakes in your year 1 versus your year 4 if you don't document them? Now here's a simple format for you to take down to document your trades, right? So you can have a pre-trade state, tell them how you're feeling, and emotions during the state, and the outcome. If you do this over 30 plus days and you have a documentation of how you trade, the trades you took, how you were feeling, how you were thinking, how you were acting, how you were moving, you are better understanding where you need to get better at, what you need to add, what you need to take away, how you need to approach the markets in the next coming month. But without that, you're kind of just shooting in the dark. So I always recommend to emotional journal, not just take a picture of your trade and write down what you did. It needs to be in depth, showing all levels of trading. This is another example. The date the trade, motion, before, during, result, and the lesson. You can have all this down so you understand. Building trading discipline. Like I was saying earlier, you have to follow a written trading plan daily, and you have to review it every single day. Just because you wrote it down last week doesn't mean you just get to trade every single day without looking at it and refreshing your mind. We're not there yet, right? So even if you are there, having a clean refresher of exactly what you need to do in the markets is never a bad thing. It's like shooting, it's like warming up before the game. You know what I mean? This is a business. You need to treat it like a business, and you need to treat it as professionally as possible. So you need to show up with the most equipped self that you could possibly be. And that's what we're playing. Respect stop losses no matter what. If you have a stop loss place, don't just keep moving it farther and farther and farther and farther down if it's getting to your stop loss. If you had a 55 tick stop loss and you risk 1%, allow you that 1% loss to hit. Because in the long term, if you're risking 1% to make 3% to 2%, you can lose 2 in a row and you're still up. It's about the risk to reward ratio. That's what's going to keep you in the game. Use alarms and routine to avoid over trading. On TradingView, they have They have one alarm that you can use for free if you don't buy the extended version. Right? So you can use that one alarm to alert you where price is if you're ever at the gym and stuff. So, all right, if price gets here, then I'll hop on the chart and see what's doing at this key level, if it respects it or not. But you can determine what's happening by the alerts, and you don't have to just be sitting on the charts the whole entire time. And like I was saying before, treat trading like a business, not a game. If this is too much like a game to you, make sure you take out some money. Put it right in front of you while you're trading so you understand this is not fake money. This is real life. Treat it like that. Tools to strengthen discipline. You need checklists. You need your entry and exit criteria. You need your pre-market prep. Go over the news, go over the technical analysis, fundamental analysis, and the sentimental analysis. Go over every form of analysis that you possibly can so you can be best equipped for the market. Breaks. Take steps away after high emotion. If it's a nice day outside, go get some air, go breathe, go take you a nice walk, come back, fresh mind. And accountability partner. If you need an accountability partner, just text me. I'll be your personal accountability partner. DM me on Instagram or go on my Discord and type in there and we can connect. We can go over weekly reviews, we can go over your charts, and we can focus on getting you better percent by percent every day. Confidence through routine. It's no different than anything that you do in life. The more you do it, the more you practice it, the more confident you will be doing it. Right? So confidence grows from consistency, not the huge days that you win. It's you showing up every day and being able to win. And you showing up every day, being able to identify when not to trade. And keep and preserve your capital, because that's the name of the game. So, it'd be smart to have a nice morning ritual. Something that you could be consistent in. Something that your mind already knows what's coming. So it can be more calm and you can get into a better flow state. And that obviously reduces your anxiety, because anxiety is too much focusing on what's going to happen in the future, and you're too much in your head about what's going to happen that you don't know. You know, you're trying to predict it. And that's the thing about the markets. We're trying to have the most accurate prediction of the market, and that could cause some type of anxiety because that's what we're really focused on. So to try to reduce that, we need to have something that's consistent, that we can rely upon to regulate our brain. You need a repeatable process. Build trust in your system. So wake up and do the same things. Win or lose, you followed your plan. That is the success here. Not if you made money, not if you lost money. Did you follow your plan? If you followed your plan and you won, great. If you followed your plan and you lost, great. If you didn't follow your plan and you won, no. That's not what we're doing here. We are building the best, the most consistent, pure price action traders. And you need to be able to follow your plan to be able to have success here. Now, the trading psychology framework. You need to have awareness of your emotional triggers. You need to be tracking and journaling and reviewing. You need to have structure with rules and checklists. You need to have practice with repetition and patience. And then you need to have confidence. That's what comes from execution, not the outcomes of the execution. You need to learn where to derive your confidence from. You should not derive your confidence from trades that you want to post on social media. You need to derive yourself from showing up every day and having a 1% that you can respect. So, in summary, emotions are natural. We're all human, right? Awareness is the thing that makes them manageable. Fear, greed, FOMO, revenge trading are all predictable traits. Journaling emotions give you the power over them, right? So discipline is a habit built on routine, and confidence comes from doing the right thing repeatedly. And then you will be like this dude right here. Very big brain. So yeah, that's all I really got for y'all today. I hope y'all enjoyed the video. It's KingJayFx, and I will see y'all in the next one. Make sure y'all click the link in the description to join the free Discord. Follow me on Instagram, where I post all my trades. We'll be going up 2025, 2026. You will be seeing me everywhere. I'm going crazy. I'm telling you. Appreciate everybody who's in the video. See y'all in the next one.